Good afternoon and welcome to Stewardship's Lunchtime Dial-In for treasurers, trustees and indeed anyone else involved in church or charity leadership. It's great to have you with us here today. My name's Jackie Fletcher and I'm Head of Treasurer Services here at Stewardship. I'll be your host for today's Lunchtime Dial-In. I'm joined by two of our resident experts today, Lawrence Duplessis, who is Head of Accounts Examination Services, and Stephen Matthews, one of our senior consultants and a very familiar voice to many of you, I'm sure. So our vision is for the world to encounter Jesus through the generosity of his church. And the purpose of today's dial-in is to strengthen Christian causes and to ensure that your organisation remains compliant and equipped to fulfil the mission that you've been called to. If you'd like to find out more about how we could help support your church or charity, then do take a look at our website, or you can call our church and charity team. The number's on your screen now. If you've joined us by phone, we will be sending out the slides by email after the call, so you will receive all of these details later. If you'd like to make sure that you receive the follow-up materials, including the podcast recording, you'll need to ensure that you're signed up to our dial-in mailing list. If you haven't yet done so, please just email our events team, events@stewardship.org.uk, and they will send you the link through. So moving on to our agenda for today, we'll be covering one new topic and a number of important reminders during our call. So the first is the new Health and Social Care Levy. We're going to talk about pay and benefits for workers and highlight the areas to be careful. A short slot on employing staff from other countries, followed by the selection and development of trustees for your Christian charity. And finally, the Charity Commission updated guidance on managing faith charities. And that will, of course, be followed by our usual Q&A session where you get to ask our panelists your questions. So we do welcome your participation. This call is entirely for you. So if you have questions, please do use the chat function to ask them, and we'll answer as many as we can in the time that we have together. If you haven't joined us before, the instructions are on the screen now. So do be typing those as we go through. So without further delay, because our time is short, let's go to Stephen, who's going to talk about the new Health and Social Care Levy. Stephen.
Jackie, thank you. Now, this is, you will have heard of it, the new UK-wide Health and Social Care Levy, announced in at the beginning of September and headlined to tackle COVID backlogs, waiting times and reform social care. We're going to have a look at the detail, and that's really about what it may mean for churches and Christian charities. Now, new levy applies from 6th of April next year and means a 1.25% charge based on income for employees. And from April 2023, this will include those over state pension age who continue to work. So it's not in the first year, but after that will include those earning above certain thresholds who are above state pension age. Now, it will also impact employers and the self-employed through an increase in what's called Class 4 contributions for national insurance. Now, initially, this increase is bolt on to the national insurance system, but from April 2023, it will be legislatively separate. National insurance rates will return to their former levels, but that doesn't mean you will pay less tax. It just means you'll pay the same amount of tax, but under two different names, mostly the national insurance, but a separate one for the social levy. Cynically, we sort of think that it means that there's probably going to be further increases in further stages after 2023. There's also going to be a 1.25% increase in dividend tax rates. That's unlikely to affect you as charities, but that doesn't apply to shares held in ISAs. Now, the levy will not apply to those elements that are currently exempt from NIC, national insurance contributions. So for employees, that means the first £9,500 of their earnings, the primary threshold that's called, won't be subject to this levy. And for employers, in respect of just under 8,800 it is, of the employees' earnings. And that's referred to as a secondary threshold, all linked to the national insurance contribution legislative framework. Nor will it apply to apprentices under age 25, anyone under the age of 21, and veterans when they're not required to pay NIC. That's a whole separate line in its own self. Provided for those last three, their earnings do not exceed £50,270. Now, so that's a pretty high level for someone who's an apprentice or under age 21, but there might be some. Now, let's look at an example of what this means. Let's take someone who is earning at the national minimum wage, just over 25. So they will pay the levy on 6,548. That is their salary of 16,216, less that first amount of 9,500 I talked about, the primary threshold. So that will mean they'll pay £83 a year or £7 a month. The employer will pay slightly more at £92. Now, so the cost is £175, but the employer may not have to pay that £92 because of the employment allowance. We'll come on to that in a minute. Example 2. Example 2 is someone who's earning 3 times the amount, so they're on £48,000 a year, and they therefore have £38,432 over the primary threshold, which means they'll pay £480 or £40 a month out of the, so the employee will have £40 a month more national insurance to pay. The employer will have slightly more, £490, and again, that total cost of £970 may be reduced by the employment allowance. Coming on to that. Now, employment allowance. I've kept saying we'll come on to it, now we are. So where you're an employer, as you know at the moment, if you're an independent employer, you get up to £4,000 that you can set against your employer's national insurance. So that rebate remains and will be available to cover the employer's social levy payments, but it's only up to £4,000. So in reality, only the smallest employers will benefit from this. So let's look at a couple of examples. First example is an employee earning 16,000, again, the first one we had before, and you can see that the employer's national insurance is 92. Total cost, if this is the only employee you've got, total cost of employers' national insurance is what used to be paid, 1,018. What's now going to be paid in addition, 92 quid, leaving 1,110, totally covered by the £4,000 annual cap. So there's no cost to the employer of this social levy, but there still is to the employee. Now, if we move on to the next example, we're looking at the employment allowance for the second example we had before, the high earner. So already the employer is paying £5,300 worth of national insurance, and on top of which there's going to be a further 480. Because the 4,000 allowance doesn't even quite cover the current level of employer's NI at 5,300, the extra 480 is a complete and extra cost to the employer. So this is an extra cost and not in any sense removed by that allowance. Right, okay. So when does the levy bite? Some critical breakpoints that are worth just noting. If you have a single employee earning 37,860, that's when you reach your 4,000 cap of employers' national insurance, or 2 employees, each earning 23,000. So at that level, you will start to pay more because of the social levy. Okay, few conclusions and action points. Employment allowance is a pretty limited use in this. So even smallest payrolls are likely to see additional costs. And if you've got quite a lot of employees, depending on their pay levels, cost could be significant. Employees' take-home pay will decrease when earnings are over that primary threshold, currently 9,500. So if you are going to restore the take-home pay to your employees, then don't forget, you're also going to have to add in the cost of extra PAYE, extra employers' NIC, and pension contributions in order to get them back to the same level. So there could be quite a lot of extra costs if you go down that route of cushioning your employees against the social care levy. So our recommendation is to look at your costs and adjust your budgets with effect from April. And our final point is, don't forget those self-employed missionaries who are working in the UK supported by your church, because if they're earning more than £9,500 a year, and I hope they are, then from their voluntary, the support they get from individuals and churches to do their missionary work, then they will also have to pay an extra 1.25%, and you may need to consider topping your gifts to them up in order to make sure they don't suffer too much. Okay, that's it on the social care levy. Thank you.
Thank you very much, Stephen. Next, today, we're going to be looking at pay and benefits for workers with some areas to be careful. And we're going back to Stephen for this. So Stephen, back to you.
Jackie, thank you. This is a reminder. So there's nothing new in what I'm going to say to you, but we do want to remind you, because what we're seeing is many churches who forget these things, and often they forget these things because we're church family. So they don't think necessarily of all the different ingredients that go together to make up the tax legislation we have at the moment, particularly around pay and benefits. The first one I want to talk about is allowances, honoraria, and other gifts to staff. Now, the first area is the whole thing of allowances. Round sum allowances to an employee is in effect extra pay to go through payroll with PAYE, NIC, and pensions. That's whether it's £1,000 a month general expense allowance, or it's a specific thing like a £60 per month petrol allowance or book allowance. To avoid these being allowances which are extra pay, you need to have detailed expense claims, get my teeth in properly, detailed expense claims, preferably supported by receipts and independently authorised. Secondly, the area of thank yous, love gifts, or appreciation. A thank you or a love gift from the church charity to one of its staff is nearly always an employee bonus. Just because we're family doesn't change the basic facts. A charity cannot give money to someone because they like them. Therefore, the reason for the gift, whether it's called a love gift or a bonus or a thank you or anything else, is almost always service related. Therefore, it is directly related to their employment, and it's really extra salary, like a big tip. Just passing on members' gifts doesn't change the basic principles. If it's a payment from the charity, then I'd expect it to go through payroll with tax and national insurance, nearly always anyway. If it's a gift from the congregation, that becomes more complex if it's given direct to them and not through the church's bank account. But it may still be taxable. So you've got to think about these things before you just want to appreciate people with an extra money. Finally, the area of volunteers, because this is not just a tax issue, but also what I call here a status issue. Are they volunteers any longer, or have they become paid workers, subject to the national minimum wage and other entitlements? Any payment as a reward for work to a volunteer can change their status from that of being a volunteer to a paid worker. There is no de minimis level. In certain discussions I've had with government departments, they're pretty strict about this. It's just a statement, any. So it then means that someone is legally required to be paid the full national minimum wage for every hour they work. And failing to do that has cost one charity that I know of quite, well, an enormous sum relative to what they thought they were doing. So be careful there. Secondly, the whole area of housing, where the exemption for providing a manse or a vicarage is not properly understood. The exemption is not carte blanche for any worker to be housed in any situation by a church. First question is a minister a minister? Now, it doesn't need to be an ordained person, but they do need to be playing a ministerial role, preferably with a ministerial title, I would say. The second is the house a church house? The church must have a legal interest in the property. Either they own it, or if it's rented, the church must be the tenant, and not just paying the rent where the pastor is the tenant. Thirdly, is everything you're paying exempt? Heating, insurance, furniture, etc. Some things are, e.g. council tax, but many things that we see get paid by churches aren't. So you need to be careful and look at the details. The third area is benefits or perks, which are often not thought of as being taxable, but are. Holidays, ministry trips, conferences. These will depend on the circumstances. It's perfectly acceptable for a church leader to go on a pastor's conference and have hotel and flight costs paid for it, if it is work related. But what if their spouse goes? Is it work related for them? And what if it's 7 days in Florida, brackets near the beach, and they go with the kids? There you've crossed a line. What about a church minibus? Now, HMRC fully understand that churches may need youth workers or leaders to be allowed to drive a church car or a van to ferry people about. But the legislation is incredibly strict about this. It isn't about what proportion of private use there is to the church use that's the issue. The tax issue is whether the vehicle is available for private use. To be unavailable, in my understanding, the individual must not have permission to drive it on personal business. And I'd suggest you get that in writing rather than having just an oral understanding. And that's often evidenced by the vehicle not being insured for private use. I have known HMRC ask for that piece of documentation. It must not, to understand it, be parked at or near the house of the pastor or the youth worker or whoever overnight. If these are not in place, and you still want to provide the car so that they can ferry people around but not pay a tax bill, I suggest you take good professional tax advice. Thirdly, phones. This is not a big one, but it is a common one. Paying the contract on a personal mobile. If the phone is a personal contract, any payment towards the minimum contract level, e.g., £35 per month airtime, is considered extra salary. This is totally different from if there is a phone which is contracted for by the church, when it has no tax implication for that first phone for a member of staff. Hence why most small churches and charities tend not to pay for mobile phones, but do pay an extra salary. And the larger churches tend to have group work contracts. Finally, the whole issue of self-employed. We see quite a number of churches who have self-employed workers. It reduces the hassle. It's much easier. But you can't just do it because you want it to be self-employed. The question is the person genuinely self-employed? Normally a test of, are they in business on their own account, using HMRC's parlance. But if you're going that way, you also need to think not just about the technical issues of are they employed or self-employed. You've got to think about some of the employment rights that as a result they don't get. Rights to furlough, notice period, redundancy, things like this. The moral of these questions is if your pastor is not an employee under PAY or national insurance, we do strongly recommend taking professional advice rather than just thinking it's your choice and it doesn't really matter. I hope that all makes sense.
Thank you, Stephen. That's a really helpful reminder. Let's move on now to our third item for today, which is employing staff from other countries. And this is brought to us by Lawrence.
Thank you, Jackie. Visas, employment and immigration can be very complex, with many loopholes, pitfalls, snares and hurdles to navigate. And this also goes for Christian charities. There may be one kingdom, but we still have to comply with often baffling national immigration rules. Now, at Stewardship, we've recently seen a couple of instances where churches and charities have run into unexpected difficulties regarding the employing of staff from other countries. Now, this piece isn't a comprehensive guide to all the issues and legal matters that might be relevant, and we would definitely strongly encourage anyone with questions to speak to an employment or immigration lawyer, but it's worth being aware of some of the potential issues if you employ or are planning to recruit staff from abroad. Firstly, the employer needs to apply for a sponsorship license before the potential employee can apply for a visa. And the type of license depends on the visa you want to sponsor. For example, a long-term visa, such as a minister of religion, or short-term, including other types of religious workers. Now, this is something the Charity Commission has actually also recently highlighted in their updated guidance for trustees on managing faith charities, which I'll speak about later. More likely to trip churches and charities up, however, is the issue of who pays for those visas and what the tax consequences are. The initial visa, that is to bring a Christian worker or pastor or missionary to the UK, is generally considered by HMRC to be a valid expense for the charity. Now, without getting too technical here, they essentially consider it to relate strongly to the travel needed to come to the UK and therefore as a proper expense for the charity. Now, again, this is a visa for someone in another country to come to the UK, not someone already in the UK, even if it's the first time that you're employing them. The challenge is really the situation where a visa needs to be renewed, or a visa for someone already in the UK. In that case, the situation as we've seen it is generally that HMRC considers the visa to be a cost for the employee, as they have to personally apply for the renewal, not the sponsoring employer, and because the individuals benefit from being able to continue in the position. And there's no travel cost element for the charity. Now, if the charity pays the visa cost, as we've seen happen, it's usually a taxable benefit for the employee and gives rise to national insurance and income tax consequences. Both situations are addressed in the HMRC Employer Bulletin for December 2018. That's on page 4. We'll send around a link to that after the call. Now, this previously didn't affect ministers or staff from the EU, but following Brexit, clearly the net for application of these provisions has now widened. Again, if you're concerned, especially if you've maybe already paid for a visa renewal and suspect you may not have handled the tax consequences correctly, contact a tax specialist or employment or immigration lawyer. This session is, as I've said, guidance, not tax or legal advice. But if you are a Stewardship Payroll Bureau client, they may be able to assist you in identifying and addressing many of those tax and payroll implications at the very least. Thank you, Jackie.
Thank you, Lawrence. That's great. Don't forget, if you have any questions as we go through the call, do be typing them into the chat. But we're going to carry on with our agenda. And next up is Stephen, who's going to talk to us about the selection and development of trustees for your Christian church or charity.
Thank you, Jackie. Now, being a trustee of a Christian charity is, in my mind, a great calling, a real act of service, and in many ways, an act of worship. And for sure, part of fulfilling an individual's role as part of the body of Christ. So I see being a trustee as being something that is really important, and it's something that honors the Lord we serve. But over the last 4 decades, I have seen some great boards and some great achievements, but I also know that there are some common weaknesses. Many trustee boards have a sort of less visionary understanding of their role. In practice, it's more of a headache than a heart mission. So I want to outline some things that may contribute to this and give some personal thoughts on what we can do to make our trustee boards the best they can be. The first is about investment. I see church and charity leaders invest in a wide range of issues, such as vision programs, staffs, teams, policies, etc., etc., etc. But I don't often hear them use the word investment when it comes to the trustees themselves. This may just be linguistics, but it can also be a different mindset. There is that old adage that the more we put into something, the more we get out of it. Where we as leaders invest in something, the more that investment should reap dividends. Now, the Charity Commission make this statement at the beginning of its guide on being a charity trustee. Quote, "Charity trustees are the people who share ultimate responsibility for governing a charity and directing how it is managed and run." In my mind, those people are definitely worth investing in. So let's look. Selection. I'm going to call it the right people on the bus. It was in the book Good to Great by Jim Collins that the principle was expounded of first who, then what. Get the right people on the bus. It's essentially that those who build great organizations make sure they have the right people on the bus and the right people in the key seats before they figure out where to drive the bus. As Collins goes on to say, they think first about who and then about what. As the book explains, when facing chaos and uncertainty, you cannot possibly predict what's coming around the corner. Your best strategy is to have a busload of people who can adapt to and perform brilliantly no matter what comes next. Great vision without great people is irrelevant. Now, that's a quote from Collins himself. And you'd say, well, maybe trustees are not the key visionaries in my church or charity. But in my experience, great charities are those with vision and strategy that are supported by great trustees. And I still think this is true. The starting point is getting the right people on the bus. So I would suggest when considering your trustee board, firstly, trustees have to share in the faith vision. Having the same spiritual principles on which a charity is based is fundamental. Otherwise, the trustees can pull in different directions. Getting people on the bus means getting people on the same bus. Secondly, pray for the right people. One of our sayings here at Stewardship is pray first and then do everything else. Apply your faith actively in this area as much as any other. I find, you know, I'm a chair of trustees of a board. I've been on quite a number of church boards, and I pray for the trustees. I think it's really useful. Thirdly, look for the right people. Sometimes the required number of board positions are filled with a great sigh of relief, and then it's job done until numbers drop or some other legal thing arises. But I think we should ask the question, what are the needs we have among the board? So keep looking. Next is consider character. Skills are important, but so also is character. Integrity, humility, but also the ability to challenge, and above all, being a team player. Critical things. Consider diversity. This is not a plea for political correctness, but a realization after more than 30 years doing this sort of stuff that diversity reaps dividends in all sorts of ways. Background, personality, experience, skills, and beyond come with diverse people on your board. Now, decisions are easy if everyone thinks just like I do, but the decisions aren't the best ones. Finally, remember the legals. Your charity governing document will often set out criteria. Also, commonly, there are important issues over trustees or people connected with them receiving any form of payment from the charity. So you've got to watch those sort of issues. Remember the legals. So, development's the next thing. Trustees, like disciples, are not just chosen, but need developing. They will need good induction into the legal aspects of the charity and their role in it, have access to good advisors and be encouraged to take advice, understand the technical aspects of their role in the context of the ministry, and be supported in the time commitments so that they are effective in decisions. Your trustee team will also need to understand not just the purpose, vision, and technicality of the charity, but also its values and its ethos. They need to understand the way day-to-day leadership works. Don't forget, they share ultimate responsibility for governing a charity and directing how it's managed and run. Back to the Charity Commission. So you want them to understand the how and the why of this, and be prepared for them to challenge those as well, which leads on to my fourth point, culture of challenge. One major legal judgment earlier this year on the financial failure of the charity Kids Company. This was really a very important judgment made by a judge. It set out some of the things about what it is to be a trustee. And they noted that the relationship between the board and the CEO was very good. But they also noted that the trustees confirmed they were able to challenge her in her role as CEO. A culture of healthy challenge is a really important aspect of governance, and no less so in a church or faith-based charity than in any other. Finally, give time. A good board of trustees are critical to a charity's long-term success. This is true of a church and Christian mission or ministry charity as much as any other. They are worth giving time to, and the result should more than repay the investment. Thank you.
Thank you, Stephen. There's some really helpful pointers there. And we do have some resources that would be helpful, which will come out in the follow-up email if that's something of interest to you. Okay, let's move on to our final item for today. And Lawrence is going to tell us all about the Charity Commission's updated guidance on managing faith charities as trustees. Lawrence.
Jackie, thank you. The Charity Commission has a strong focus on faith charities. Now, this just naturally follows from the extensive network of faith organizations structured as charities, but it also recognizes the particular challenges these organizations face. The Charity Commission has recently updated their specific guidance for the trustees of faith charities. This guidance seeks to help trustees with the particular complexities of their roles, particularly around governance structures, which often have to overlap and interact with, for example, church leadership, what constitutes charitable activities in this sector, and more. Now, the updated guidance doesn't contain any particularly new information. There's nothing earth-shattering in there, but it is a helpful reminder on key topics, such as why churches are seen as charities in the eyes of the law, things to keep in mind in appointing and paying trustees, if applicable, and Stephen has spoken about some of that. Responsibilities to report matters to the Charity Commission, such as any serious incidents. Basic financial controls, particularly around cash collections, bank reconciliations, and electronic payments, and of course also about making international payments. It also looks at the key issues around compiling and filing annual reports and accounts, and the trustees' specific responsibilities for those documents. Importantly, it highlights what the trustees should do in relation to safeguarding and consider regarding the sensitive area of inviting potentially controversial speakers, as well as their legal responsibilities for employing people. Now, sadly, many, if not most, of the Charity Commission's announcements of investigations into charities, at least anecdotally, it seems to us, seem to be related to faith charities. Now, this might be for many reasons, but sometimes faith charities err too much on the side of trust, friendship, and sometimes also skepticism of secular authorities with all too familiar bad results. Now, for the sake of Christian witness, we believe it is right to make sure we heed the biblical commands to be subject to the authorities, also in this area, and follow the Apostle Paul's approach in having the highest standards of governance and oversight in financial matters, such as with the collection described in 2 Corinthians 8. Now, this isn't scaremongering. Unfortunately, it's rooted too easily in reality. A recent regulatory alert from the Charity Commission, for example, announces that they opened a formal investigation into a church in London after identifying that an individual was given a whopping £900,000 in unsecured loans. They also identified concerns about the church's awarding of payments and other financial benefits to trustees and others connected with the charity. As I've said, the guidance to trustees is largely reiterating information already available to them, but it is helpful as a short checklist for faith charity trustees to run through and check if any of the topics have maybe slipped off their radar. It shouldn't take long, and it's worth consideration as an agenda item at your next trustees meeting, perhaps. Now, at Stewardship, we also recognize these specific nuances involved in the faith charity trustees' roles. And we want to encourage trustees of churches and Christian charities to make sure they're familiar with the Charity Commission's thinking in this area. We have a number of resources related to this topic, and links to that will be sent out after this call again. On a related note, you will of course be aware that it is Charity Fraud Awareness Week. Now, I say that tongue-in-cheek, but it is an important topic. While everyone is vulnerable to fraud, and by all accounts, online scams and similar have just increased during the pandemic, charities have particular vulnerabilities due to the volunteer and often more informal nature of their financial arrangements. Action Fraud has just this week reported that charities lost more than £8 million to fraud last year in over 1,000 cases, and that is likely undercounting by their own admission. Now, there are a number of ways scams can take place, and remarkably, one of the most effective is still the good old telephone scam. Now, they mainly take the form of someone pretending to be from the bank and persuading the treasurer to transfer money to another bank account. We're aware of a number of these. In one real case, they persuaded the treasurer to transfer from his own personal account to £30,000. Now, in almost all the cases, the treasurer realized almost immediately that he'd been fooled, but it was usually too late. We also know of cases of people phoning treasurers pretending to be a supplier and saying that their bank details are changed and future payments should be made to a different bank account. And surprisingly, this was particularly common where a church was getting work done, building work, and the builder's details were advertised on a hoarding. So it's fairly easy for the fraudster to pretend they are from that company. They also seem to actively look for treasurers' details on church websites. And with all of that in mind, some practical steps worth pointing out. It may be wise not to have treasurers' details on websites, at the very least not contact details, nor the church's bank details. It's far too easy for rogue direct debits to be attached to your accounts with no checking by the banks. Independently check and confirm bank account details and have dual authorization for all bank transfers. As part of Charity Fraud Awareness Week, the National Cybersecurity Center is offering free access to their early warning tool on cyber attacks to charities. More details will also be in the follow-up resources that will be sent out after this call. There was also a case of a treasurer pretending to have been a victim of a scam when he had actually taken the money himself, but that is another story for another day. Thank you, Jackie.
Thank you very much, Lawrence, for that. So that brings us to the end of our agenda for today. And before we move on to questions, I'd just like to highlight a couple of things that you may find helpful. The first relates to an article that we've given today about trustees. We do offer trustee training here at Stewardship. It's designed to equip those who are new to the role and act as a refresher for more long-standing trustees. It covers the main issues relating to being a trustee in a church or Christian charity. Our feedback's always hugely positive, so do check this out if you think it will be helpful to you. You may also be interested in signing up for our consultancy helpline, where for a very affordable annual subscription, you have access to professional consultants who can answer your questions on a range of topics, including charity governance, employment, accounting, charity law, property related issues. So details of the service and how you can sign up will be in the follow-up email. And finally, just to direct you towards our dedicated resource hub, where you can find all of our free briefing papers, relevant blog posts and other resources. Such as template policies, employment contract packs, and they're all available to purchase in our online shop. The link will be in the follow-up email as well, so do take a look. Okay, what we're going to do now is we are going to run out of time. If you've asked a question that we didn't get to, please check out the resources which are going to come in follow-up email, because hopefully that will answer any remaining questions. But if there is still something you'd like to ask after you've had a read through, please do get in touch by email and we will do our very best to help you. Now, included in the follow-up email, there will be a brief survey that will take no more than 3 minutes. Thank you to those of you who completed it last time. I would just ask, I almost hate to ask actually, but I would just ask if you could just spare us a few minutes to let us know how we're doing. Things that we're doing well and that you appreciate, whether there's anything else you'd like us to include. And particularly if you haven't taken part in a survey for a while, we would be so grateful if you would just take a few moments. Thank you very much for that. Now, our next dial-in will be on Thursday, the 3rd of February, 2022. Yes, we are nearly in 2022. So do keep it free and we hope you'll be able to join us. Please feel free to invite anyone else who may be interested. We're keen to address the questions or the issues that concern you directly. So thank you if you sent in your questions prior to the call. Please do that at any point in the year. Just let us know what you would like to hear on us about. So now it just remains for me to say thank you to both Stephen and Lawrence for taking the time to share their expertise answering so many of your questions. Thank you both, and thank you to all of you for joining us today. Hope you found it helpful, and we pray that you and the organisations that you serve will be blessed by this and a blessing as you serve in your communities over the coming months. Bless you. Thank you for joining us.